Managerial Economics, an orientation lecture. In today's session, we will look at the following things. What is economics? What is managerial economics? Why do we need to study economics? What are the applications and what is the importance? Factors and other business functions influencing managerial decisions. Managerial economics and the other disciplines which contribute to this study. Managerial decision making, what are the theoretical concepts available to us? Finally, we look at the scope of managerial economics. We will then look at our total course curriculum and what are the additional activities students need to undertake. If you look at the human environment, we see that while humans have unlimited wants, they have limited resources. The water is scarce, the air is polluted, the land is finite. So what do? So they constantly need to make decisions about what to produce, how to produce, for whom to produce, and how to allocate those resources. So economics is basically the social science that studies allocation of scarce resources among competing ends. Problems of resource allocation is faced not only by individuals, not only by business firms, but even by nations. We go one step further, and when we study managerial economics, we can look at managerial economics as economics applied to problem solving at the firm level. So that is the foremost problem faced by managers. The focus of managerial economics is on identifying and solving the decision problems faced by managers. Why should we study economics? We need to study economics because it is a major influence in our day-to-day lives. In fact, economics dominates our day-to-day activities. But lest we feel that business decisions are only formed on the basis of economics, we must remember that there are other considerations which managers have to think about. For example, the human and behavioral considerations. For example, if you were to think about your employees and they asked you for wage increase, you will have to consider, even despite having resource constraint, because you have to think about their motivation. What will be the effect on their work culture? Similarly, technological forces. In economics, although we hold the technological aspect as constant, in real life it is not so, because technology is ever changing and managers have to think about the latest technology available, because that could be the game changer. Further, today environmental factors are assuming much greater importance. You have to think about all the stakeholders, the government, the community, your suppliers, your customers, all of them play an important part. And further, environmental protection is becoming a very big consideration. Look at the pollution levels and look at the global warming. And finally, the objective of the firm really decides what kind of decision the firm makes. Economic theory only talked about profit maximization as an objective, but today there are several objectives which are replacing this single objective. It could be making a satisfactory return on your investment, or it could be a market share, or it could be some other benefit to the community. Now, when we study microeconomics, we know that economics plays a major role in microeconomics. When we study economics, we know that there are two major branches of economics. The first one is called microeconomics. It deals with the theory of firm. It studies the behavior and problems of individuals and small organizations. It allows us to make decisions regarding allocation of resources and how we price our goods and services. It explains and focuses on supply and demand and other forces that determine price level in the economy. It also talks about the impact taxes have on businesses and how government regulations play a major role. And other than maximization of profits, the other objective could be minimization of costs. The second branch of economics which we study is microeconomics. It looks at the behavior of economy as a whole. It studies entire industries and economics. We talk of GDP, that is gross domestic produce, employment and unemployment, rate of growth and general price levels. We talk about the aggregate consumption and inflation, because today inflation is a very critical problem facing our economy. And finally, because of globalization and internalization, we talk about balance of payments. There are other disciplines which contribute equally to managerial economics. One of them is operations research and statistics. Operations research has contributed by building mathematical models to address the problem of optimization. When we look at management theory, it helps us in decision making. And finally, accounting, we call, is the language of business. It gives us the raw data required for controlling our activity. In fact, there is a further development in the field of accounting, and that is known as management accounting. It helps us greatly in decision making. We also have three major theoretical concepts which help us with decision making. The first of that is concept of opportunity cost. Whenever we undertake an activity, we must consider other alternatives, because how do we know that the alternative undertaken by us is the best one? So opportunity cost enables us to evaluate our alternatives. I'll give you an example. If you wanted to invest in stock market, what kind of returns would you expect? Now you have a benchmark. If you were to put your money in a bank fixed deposit, you would get, let's say today, a return of 8%, which means stock market return should be higher than the bank return, only would then the stock market investing would be productive. The second concept which we adopt in managerial economics is called concept of marginal analysis, because we want to know, whenever we undertake some additional activity, are the additional benefits greater than the additional cost we are incurring? Only then would that additional activity be worthwhile. And finally, we look at the concept of discounting, because we know that money has what is called time value. Because let's say if I have 1000 rupees today, it is not the same thing as having 1000 rupees after 1 year. The reason is there is a bank rate of interest which money can earn. Money invested can earn a financial return. Now, if that is the difference between money today and money tomorrow, in trying to evaluate a project, an investment project which has cash flows materializing in the future. So how do we compare the future cash flows with the present cash flows? And that is where the concept of discounting comes in. We convert the future value of all the cash flows into present value, and then we have a equitable comparison. Now, when we are studying managerial economics, we must know what is the scope, what are the benefits that will flow to us. So here are the fields where managerial economics proves effective. First of those benefits is demand analysis and forecasting, because demand is the prime consideration for a business. If there is no demand for the products, then business has no reason to exist. So demand analysis and forecasting is a major benefit of managerial economics. Then businesses have to know their cost and production, because they need to produce the goods and services. Then further they need to price their products. So pricing decisions, how do we make them? And we all know that businesses exist for profits. So how do you maximize your profits and how do you manage your profits? And we also know that businesses need to invest substantial resources in producing goods and services. And we know that capital is scarce. So how do we effectively do the capital management? In our subsequent lectures, we are going to look at the full course curriculum. That means we'll look at demand analysis, cost analysis, pricing analysis. These are the topics under microeconomics. Under macroeconomics, we'll look at national income analysis, theory of multiplier, theory of trade cycles. We know that there are periods of increased activity and then there are depression and slowdowns. Then under microeconomic policy, we will look at how governments manage the larger economic picture. Thereby we study monetary and fiscal policy. And as I mentioned that today, not only in India, but all over the world, inflation is a major problem. So what are the theories of inflation? Students, besides learning the course material, they should also expand their horizons by watching news, by looking at the webcasts on the internet, read the financial newspapers, look at the financial journals. They will also be given project work so that they learn the practical aspects of business. They will be undertaking consulting assignments and they will be making presentations, so they are in tune with the real business culture. Thank you very much. Anita? Good. Second time I recorded.